Last week, we had the largest mortgage settlement or mortgage suit settlement in the history of homeownership in the United States. $25 billion between Bank of America, Chase, Wells Fargo, Ally Financial, and Citigroup. It will go up by another $4 billion if there's another 9 small banks that join in this settlement. Now understand, this was a settlement with the Attorney Generals over several different issues with mortgages, but more importantly than what the settlement was about, let's look at the details of the settlement and how it affects you and your clients. So $5 billion is going to be paid in $2,000 increments to homeowners that were illegally foreclosed on due to robo-signing between January 1st, 2007 and December 31st, 2011. So if you have a client that was foreclosed on in that time period, there's a chance they'll get a $2,000 settlement fee. Now that's not really the important part as far as an active real estate agent today. There's 3 more parts of the settlement that apply to you and to homeowners right now that are struggling. $10 billion will go to people who are current on their mortgages for loan modifications. This is fantastic. This will help a lot of people who are paying their mortgage right now, but might be facing imminent struggle to actually be able to afford their mortgages. This is fantastic. $3 billion is going to underwater borrowers for refinancing. So if somebody's losing or underwater on their house, they're having trouble, they can refinance their property. Now, this is a part that the news media is not talking a lot about. This is where some people are even saying it's a controversial, that it might increase foreclosures. I tend to take a little bit more positive look. $7 billion is going to go towards short sales, forbearance, relocation assistance, and here's the catch, it also will go to deed in lieu of foreclosure. So a lot of people are saying that $7 billion is going to increase the number of foreclosures. I prefer to look at it as this will be incentives, relocation assistance for people who are getting short sales. All of this is incredibly positive. Now here's the timeline, because everybody wants to know when and how. In the next 36 to 60 days, administrators are going to be picked to oversee all the logistics. They're not in place yet. They'll be monitoring compliance. In the next 6 to 9 months, people eligible for the $2,000 payments, that $5 billion that are paid to people who are already foreclosed on, $2,000 at a time, they will be notified by mail. And in the next 3 years, all of these steps must be completed by banks. There are large incentives, massive incentives for banks to complete all these steps in 1 year. So this settlement doesn't stop current foreclosure proceedings. It doesn't change anything with people who are currently going through issues. This is the interesting part. This really does make this the year of the short sale. This is as much money as has been available for this problem since the very beginning of this crisis. The banks are funding this. This is not funded with taxpayer dollars. This is a settlement that the banks are going to pay out. So the banks are paying. We as taxpayers are not taking the brunt of this. The banks are actually going to be paying to help us out of the challenge that we have. This is an incredibly positive settlement. I look forward to sharing more with you on our broadcast this coming Thursday.